The federal government's GST tax holiday began on December 14th as a way to give Canadians a break when shopping or dining out. While restaurants say they've seen a boost in sales, some businesses say it's barely helped them at all.
Businesses really had to scramble with almost no notice to put this holiday in place in mid-December. It cost the average business about $1,000 just to do the point of sale machine changes that they needed to create the change.
Dan Kelly, president of the Canadian Federation of Independent Business, which represents more than 100,000 small and medium-sized businesses, says most business owners saw a reduction in sales because of its temporary nature, and says the change was hugely time-consuming.
I spoke to a Toronto gift store. The owner of the gift store had just had a baby. She was on mat leave herself, has a handful of staff, has 75,000 items, and had to go through each one of them by hand to figure out which ones the GST holiday would apply to and which ones it won't.
The CFIB conducted a survey and only 5% of its members reported a boost in sales from the year prior. Kelly says retailers were also worried if they made a mistake on taxing an item, there'd be serious consequences.
They're in great fear of an audit in, say, April or May. And if the Canada Revenue Agency has found that you either charged tax when you weren't supposed to or didn't charge tax when you were supposed to, many business owners are worried about getting a giant audit bill with penalties and interest.
Meanwhile, it's been a more positive month for Restaurants Canada.
We went out and we did some work with Open Table to take a look at what's happening with online reservations. And in Ontario, we found a 23% surge through the last couple weeks of December.
The organization says restaurants saw a 7 to 9% boost in sales overall, largely because customers were upgrading orders and adding items they may have previously avoided before the tax cut.
It's been a really difficult go for restaurants. We are seeing more than half of restaurants continue to struggle just to break even. What we know is that over the past couple of years alone, we've seen the cost of running a restaurant go up by about 20% in every category.
Both the Canadian Federation of Independent Business and Restaurants Canada say they are calling on the federal government to make the holiday tax cut permanent, which is set to end on February 14th. In Toronto, Catalina Gillies, City News.